Hey guys, this is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to take a look at something a little outside the ordinary for what we're typically looking at in the free videos, and this just happens to be during live market hours. It's currently 12:30 Central Time. Typically I try to not do a lot of trading during the middle of the day. Usually you're going to see less volume and it's kind of quiet action, but there's kind of a unique situation with Facebook that I was going to step through. So this is my primary swing layout, at least it's one of them, where I'm looking at daily and weekly charts. I use it a lot and I don't really want to basically just mess up what I've got laid out here. So what I'm going to do is hit this icon here in the top right hand corner. That will allow me to duplicate this workspace, and by doing that I can do whatever I want to one of these and not mess up what I have for my typical swing workspace that I follow each day. Once I've got this done, some of the things that I like to look at is, we start off here with the weekly charts. The first thing you want to think about is, how am I in relation to these extensions? So we like to take our previous swing high to swing low. Actually, make sure we got the right tool here. It's a little tricky with the naming in Facebook because you're actually going to use your extension tool to measure symmetry, and then this tool to measure your extensions. So we're going to grab a previous swing high, compare that down to your swing low, and this is going to give you an idea of whether or not you should be buying this chart to begin with. So now that I've finally got these extensions drawn correctly, the snapping feature was kind of being a little fickle, but we've got it working there. And what you can see is you came down and you tag the 10 on the weekly chart. That's typically a really good area to watch for support. Now the easy part of this trade, yes, I would say is over, because the easy move is the move into the 1272 extension, but it held the pullback to the 10 very well. And the other thing that's nice about this chart is you're near new all-time highs with a daily squeeze. So if you're super conservative, yeah, the weekly chart is a little extended. If you're willing to take a little bit more risk, the daily chart I think has a lot of opportunity in relation to the fact that you made the new high and you've got a squeeze behind you. So when you look at this off the daily chart, it's also helpful that if you'll run your fib extensions by removing your studies, this makes it to where you just have clean price action, so you can come down and do a little bit better job of grabbing those swing highs and swing lows. Just like we looked at the weekly chart, where your easiest extension is the 1272, exactly the same idea reels off the daily. Now we picked up some positions in the chat room this morning showing how we'd like to try and see if this can go on and make up into that swing high, and ideally the voodoo line that comes in there at around 81. But if you're looking for day trading opportunities, there's some interesting things to look at inside of that too. So you can set up the daily chart like we've already discussed. Then if you come back down into your kind of your intraday analysis, we had some good volume to open the day. Had some volume where it kind of died off, and it has died off here. The main thing that I like about this is that we're near the all-time highs. We've got the momentum of the 15-minute squeeze, and in light of that too, there's also a 78-minute. So if you're looking at this off of extreme, what I would call scalping, you just want to drop down and say, what is my trigger off of? What is the main time frame that I'm trading? Since I've already set up the daily, let's look at setting up this trade off of the 15-minute, and in a perfect world we can be out of it by the end of the day. You'll notice the 1272 extension of that move is a little bit smaller, takes you into about 79.27. So the idea off of a move like that, you'd like to have a pretty good delta. That way you're not, you're actually participating in the movement of the stock. For the comparison that I'm going to show today, come over to an options chain, and these are the contracts in question. So the 77s are the one that we picked up that are a little bit better because they actually have a little bit better delta, and that's what we picked up earlier in the day. For this short-term move, what I'd like to see is that in a perfect world, these squeezes get us a nice expansion and a quick move, and these will do a good job of moving with that as well. So what we can do here is copy the actual sell. Now you can right click and send over to a chart, that will work as well, but that will only work if you're using the main part of your platform. If you've got this in a detached window, that's where you have to copy and paste. So I'm going to take this and add a third cell to it that branches off over here into the right. Obviously that doesn't do anything to damage or to change the price action in the way I'm looking at it, so I can still keep a close eye on the charts that I'm following. And then I come over here into this chart on the right and use Control, which is the key on the bottom left-hand side of your keyboard, and press V as in Victor. Once that's done, you'll be pasting the actual option code into the cell. In this particular instance, I'm not really needing to use the weekly. We started the analysis there, but now I can kind of hide it. And now I just want to focus on this intraday trading. So we've calculated our targets off the 15-minute. We know that we need to get through the snow line, or the skyline rather, right here around pretty much exactly where we're trading. And if that 5-minute squeeze can be a catalyst for it, we look for that to feed over into the 15-minute and ideally take us up into our targets. So we're keeping an eye on the 5 and 15-minute squeezes. We're up and through that 78, 72 level by a fraction. So far so good. In a trade like this too, if it takes out this previous swing low, that's not really going to look as good from the day trading perspective. From a swing trading perspective, it wouldn't really matter. But here again, this is focusing on the smaller part of this trade. So we've got the 5-minute that we're keeping an eye on. Coming back over to this grid cell on the right where we've copied and pasted the option code, this is where things are interesting by going into the active trader, which is what's abbreviated by AT here. So if we click on AT, this is going to bring over a really handy way to look at this various information. So for the chart itself, it's not really all that important because this is, here again, this is the price action of the individual option that we've been discussing. If we hide the chart for that given cell, now what we can do is look at the price action in Facebook, the direct movement of those particular October $78 calls. We can see the quantity of the number of contracts we have. We can drop this arrow down to give us more automated ways to focus on trading this. And I've been scaling into this using single contract positions. So you can configure all of this here in the DOM, and it's a really handy way to look at this. You can see that right now my average price on this is $1.32, and I'm willing to buy all of these contracts should it pull back essentially down into this area. So the idea is that I'm willing to buy all of this. If we take out the previous swing low, I will consider myself wrong. Otherwise, we fill up on the way down, ideally hold our low, and then move into the extension. So, that much of a setup would probably be enough to do a video on. But since I am doing this a little different, and since I'm going to try and give you as much information as I can, what are some other very minute things you would like to see hold here? Now, I would never run this type of fib analysis on such a micro time frame because it just gets to be so time consuming, but I more like to do it just to point out the fact that this stuff works just like fractals, meaning if you can understand it on a daily chart, you can understand it on a 5-minute chart, and there's really no difference to them. So as we sit here and just kind of discuss the price action, the first thing that kind of makes this attractive off of the 5-minute chart is that when you look back down to this swing, this is what you might call kind of the bearish part of that move. What you want to see is what these types of rallies did that weren't able to get you through resistance. So you look at this, and actually I like taking the rally that leads into the decline. So that would be this swing low to swing high. You project that from this low, and you can see the area that we're working to get through. That's kind of the last and most important swing. A few others in here, and part of what made this trade at least start to look better is that you're clearing some of the bearish symmetry of these previous swings. Now on this too, you'll notice the 5-minute, like for this bar, that's a pretty healthy swing. It's a low of 78.63 and a high of 78.91, but it's hard to run the fib work because it's all done in a single swing. So what I do here is I start and I say, okay, low, 78.63. Let's bring this back down to a 1-minute chart. You can kind of adjust the price action to get it to where it's easiest to see what you're looking for. Sometimes it takes a minute. But all this is showing you is exactly the same price action on a tighter price scale. So now I can take that low. There'll be a couple here. So we'll take this swing low to swing high, project it from your low, take this, and do the exact same thing. So this work can be tedious, and that's another reason why I don't really recommend running your entire life off of 1-minute charts. But you just start to see, okay, this rally couldn't get it done, this rally couldn't get it done, and the bearish trend continues. But then as you start to clear symmetry on the way up, that helps vouch for the bullish side of the move. So that broadest level we were just looking at has essentially been cleared. The other thing that you like to add with these swings after you've run symmetry is the retracements. I typically just run the last major swing. So that would be 79.09 into these lows as well. And your 618 retracement is the last area we need to clear in that given analysis. So all of that is very important stuff. Obviously, once you've cleared resistance on the way back up, you can clear that by either right-clicking and removing your drawing, or you can use control-click. So control-click allows you to just individually remove those. I kind of leave these on as they cluster. So you can see resistance right here is from 78.76 into about 78.84. You can press that back in. Once you've got your drawings all set up the way you like, you can go back into either one of two things or both. You can change it back to your 5-minute chart, where that analysis will look a little bit broader, but squeezing down into the 1-minute allows you to be very precise with it. And then you go back to add your studies, and now we just wait. So here again, the setup is holding against the swing low, made at 78.43, looking to clear our cluster of resistance and move into our extensions. I'm going to take fills all the way back down into here. And here again, just while we've got a little bit of time and we can discuss these things, let's now analyze support. So the 5-minute chart may be, the swings inside that aren't especially accommodating for analyzing support. So let's bring it back down into the 1 minute, maximize our grid cell, and then we'll do the same thing by hiding our studies. And now we do the exact same thing in reverse. So if I'm looking for essentially support, what I want to find is the decline that led into the rally. So this is the decline that essentially the stock sold off into the low that preceded the rally. So that would take this swing high to swing low. Remember, this stuff too is it's so micro, and if we come up here and make a new high, then all of this has to be recalculated. So it's essentially just trying to give yourself a heads up on, am I still right in this decision? So we come back and run these various levels. The best part of this is when you have very nice confluences of support defined by these various types of studies. That 78.68 was technically breached, so I'm not going to include that, but you had a perfect symmetrical low that were 78.66, and that was exactly the decline that you saw here. Now, of course, with this type of analysis, you will find all types of relationships that are constantly blown through. That's why you like to use a trigger. That's why you like to make sure you're trading in the trend of your primary chart, which in this case was the daily. And I also like to have it, coupled with the squeezes, which will tell you that there's a big move coming. So essentially we've identified some symmetry support there. Ideally that holds. There's going to be a few more levels on the way down. It just shows you how you can look at the chart from both the bullish and bearish perspectives. Let's go ahead and pause this video for a moment and see if we can get resolution from these signals. So once you finally get the breakout that you're looking for, which this is that 618 retracement that we've covered, and it's up and through that, now you have a couple different options. So I've got several different contracts that I was trying to pick up at lower prices. A few of them got filled, but I didn't quite get all of them that I was wanting to take. So if I kind of scroll back down here, I can see, okay, my average price is $1.32, and currently they're trading right around $1.40. If you want to be more aggressive and go ahead and get the remaining part of your contracts, you absolutely can. I typically look at this and say, okay, while I may have not gotten the full size, I've got risks that I'm perfectly comfortable dealing with, and if this just goes straight up on into my targets, then I'll get a very nice return on that entry. So I tend to stay a little bit more focused on just having the initial position that I've put on. If it pulls back and can fill those, that's great. Otherwise, I will look for the move into 79.20 to take profits. On something like this too, you might say, well, once it hits that, won't that be kind of in that new range or that new high territory? So the idea is that it could continue to push on higher, and it does have that potential. So let's look at a way we might be able to place those types of orders. So as we come over and we're taking a look at this particular setup, I'm going to drag over my options chain, and remember we've got two separate series here that we've been following. You've got a little better directional movement with the contracts back down here at 77. We're playing the 78s, but that's okay. So we bring our drop down in. We're going to, it's also handy here if you look at your positions by the actual instrument rather than how they are laid out by orders, because of course if you've scaled into these one by one, looking at them by orders will be a little taxing. So instead, let's change this back down to just looking at the number of contracts. So this means that I have 8 of the $78 calls. I'm going to left click on that dot, go up to create a closing order to sell Facebook. And here again, what this is doing is giving myself a target where when that target is hit, it's going to trigger a trailing stop. So that's 79.28 on the extension. So we're going to come back over into this gear here on the right hand side. It's going to bring up a list of conditional orders. We're going to click on the middles part of this. It's going to give us Facebook. We're going to say when the market price of the shares are at or above the 79.28 that we just pulled from that other chart. So it's 79.28. We're going to say when the price is at or above that, I would like to trigger a trailing stop. So what I do to configure that, let's come up here into the left hand corner. We're going to change this over to a trailing stop. I do not use a trailing stop limit in those situations. I just use it based off of a regular trailing stop. 10 cents would be pretty good. I would even maybe go a little smaller on Facebook because your bid ask on those is pretty good, but 10 cents should be about right. So those are all linked up. You can go in here and make the stops for each a little bit more specific if you wanted to change one side to the ask as opposed to the market price. But for, you look at it and you say you're already having hit your targets and using a trailing stop and all that. So for me, this type of execution is good. You've got a day order, which means if it happens to not be filled today, which would mean that your target is hit and Facebook just keeps on rallying, then you will have this position tomorrow and you will have to edit it then. But essentially for everything that we've discussed so far, that all looks pretty good. So I will click OK, and then we'll come back in and hit confirm and send. And now our orders are in place and working. The only thing we have to do into the afternoon is hold tight, see if we can get our extensions, and the rest of the order should essentially manage itself. So if I find something in here by the end of the day that I can tack on to show you more about this, then we'll see how it played out. If not, I would still prefer to get out of the options before the end of the day just because it was a day trade and I already have my other swing trading options. But hopefully that shows you some micro fib analysis along with advanced options orders and give you some ideas on how to trade Facebook. We'll see you guys at the next free video.